Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpsummit.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again at the euro currency. Well guys, maybe from the technical point of view it's not very interesting right now, the situation on the euro currency, at least market, although it is showing some upward retracement, but it hasn't changed our analysis yet, because for us, from the technical point of view, this is the major point to watch for, because until market stands inside the swing of this long candle, and below this low, below these highs, the chances on appearing of this butterfly is still valid. And we said, as this is really strong support area on the monthly and weekly chart, then probably market should respect it. And this respect probably should look like some extended reversal pattern on the daily time frame chart. I mean, extended is something that is visible and extended in time. So this butterfly, free drive, head and shoulders, it should not be some sort of the bullish engulfing or just one candle pattern or something of this kind. What I would like to discuss with you today is the recent Fed Reserve speech and what is really going on right now in the United States economy. I do not want to speak much about this, but just to point some major issues in the current situation in the United States economy. So, in the first glance, in the short perspective, everything looks fine. So, we see that the employment is growing, the inflation shows some acceptable rebound. So, because we've got the consumer prices approximately 0.4% in the previous month, so that's really looks good. And yesterday, Fed Reserve also has given the hint on the possible a bit more aggressive approach, more aggressive measures in terms of the rate hiking. So it's maybe Fed Reserve could start the rising rates a bit earlier. In our weekly, in our thread, in the update and text thread in our forum, I will post today the recent Reuters article that dedicated to the Fed statement, and there you will find the median forecasts of the analysis concerning when a Fed Reserve could rise the rate and what rates most economists expect to see in different years in 2015, 2016. But currently, guys, there are two groups of economists that have the opposite opinion on the current situation. One group of the economists, including the economic advisor of Barack Obama, it's Mr. Kruger, they thought that they differently assess the current situation with the employment, because the current decreasing of the employment, and particularly speaking of the decreasing of the unemployment, doesn't necessarily mean that the unemployment becomes less. It just means that some people was absolutely discouraged to find the constant regular job, and they just switch from one part-time job to another part-time job, but they was eliminated from the numbers of unemployment persons. And they have different view on the impact of the unemployment on the inflation. So Kruger and other analysts think that unemployment presses on the wages and has the tendency to increase the wages, and by this action in turn leads to growth of inflation. While Ms. Yellen thinks that unemployment, vice versa, increase the supply on the job market and leads to decreasing of the wages, and by this moment, they think that this unemployment negatively impacts on inflation. Who of them will be right is at the end point of this spiral, the economic spiral, we will see. But that could lead to different policy that could apply the Federal Reserve in the perspective. So following the thoughts of the Mr. Kruger, the Fed should start raising rates earlier because they think that the policy of the low rates has done everything that it could, and its currently effect, the positive effect on the economy becomes anemic, and the time has passed of the positive effect on the economy of the low rates. Ms. Yellen thinks that not quite, because as I said, they think that unemployment depressed inflation, and that's why they think that they could stand with the low rates a bit longer time. Well, that's two major moments. That just indicates what's the problem with the United States economy right now. What's the major question? In 2 words. And depending on the newest numbers that we will get from the non-farm payrolls release, from the inflations, CPI, PPI, the consumer prices, they will be probably the major indicators that all market participants and analysis economists will be tracked. You could say that they track it every time, but currently I think that we approach to some moment where some break-even point in the Fed policy, because situation I think becomes harder in terms of the balance between the unemployment, inflation, and economy growth. And they probably this data, I mean the non-farm payrolls release and inflation data in the nearest future, will lead to the significant volatility, because the impact on the markets probably will increase, and they will be more significant, more important for the market than it was, say, even half year ago. Now we enter in some hot period of probable long-term shifting in the Fed policy. So we could, in the nearest future, shift to some period of when the Fed could apply some measures and start to hint on the more hawkish policy. So we will see. But I just would like to show you the two different points of view on the current situation, and what's the core of these opinions, and why we see some contradictory assessment of the current situation, contradictory view on the unemployment data, on the inflation, because there are two different sides in assessment of the current situation in the United States economy. So you should not be surprised when you will get some not quite logical action on the market, because this really could come from the different assessment by the investors of the same situation. So now let's turn to technical issues. So that's the pattern that we currently expect to get, and particularly speaking, we would like to get the testing of this support area. And currently I see only one pattern that could lead us there. This is possible bottom-line buy. That also could trigger the respect of this support area in the nearest future. Maybe market will form something else a bit later, but currently I do not see anything except maybe this butterfly. Now, we said that probably market could show the deeper retracement to the upside inside of the bottom of this initial swing of the butterfly. Now we see that this is now really happening. Now let's take a look at the 4-hour time frame chart. On the 4-hour time frame chart, we have an area where this upward direction could stop. At least we will be watching for at this moment. That is the area of the weekly pivot resistance one, and you can see that the target of this large A, B, C bottom 618 extension stands at the same area. Besides, if you'll take a look at the initial A, B, C bottom here, you will get the 1618 extension also in the same area. So the weekly pivot resistance one is important for us by another reason as well, because that's an indicator of the trend. So if retracement up will be held by weekly pivot resistance one, it will tell us that downward trend is still valid, and and it will mean that our setup is still valid and we could follow it. So anyway, the major point to watch for us is this top. As soon as market stands below it and stands inside of this swing, the chance on appearing of the butterfly is still valid. So we have this reaction, maybe some closing of the short-term positions or something of that sort, by this grown to the upside. But in general, guys, in the long-term perspective, the situation on the United States dollar is more favorable than on the euro currency, because as the United States government, as the Federal Reserve is contracting the quantitative easing program, and the turmoil in Iraq and Ukraine increase the value of the safe haven currencies, European Central Bank conversely and oppositely trying to launch the quantitative easing program and following the steps of easing the policy. And we already have seen this in the previous European Central Bank meeting. That's why after the short-term reaction, very probable that we will see the continuation of the downward trend here. Anyway, we just have marked the level that we should watch for, and let's see what will happen. So from the daily perspective, from the daily analysis, as we said, nothing has changed significantly. So our analysis that we have made even in the beginning of the week still valid. We're still watching for the patterns. If you will find something to trade here on the intraday charts, maybe on the hourly chart we will get something, well, we could trade, but right now I do not see really much what could be done. This short-term reaction now stands on this statement of the Federal Reserve. No patterns have been formed, so let's see what will happen. Maybe if you'll find some reversal pattern here, you could try to possess yourself with this big butterfly with the downward action that could really happen right to the area around 134.60, probably somewhere in this area. But you could try to do this, but in general, guys, as I said, the major object for us is to get this reversal pattern that will let us to take the long position as the reaction of this support area. So we could make this not bad trade on the daily time frame chart, I suppose.